Alright, boys and girls, the price of Bitcoin continues to plummet and it's currently below $40,000. Unfortunately, it continues to take the rest of the market with it, and in this video, I'm going to talk about why that's happening, how far we can go, and when we might turn around. First, I'm just going to hit you with a little bit of good news because there's not much and we got a lot of bad news to get into. Before I do though, I just want to say I am a permabull and I know that as soon as I start talking bearish, people are going to click off the video. I'm just trying to keep it responsible with you guys and let you know that we're not going up in a straight line forever and there are going to be retracements. These pullbacks represent opportunities to multiply your wealth though, and if you subscribe to and listen to people who are actually going to tell you the truth instead of only telling you the bullish news because that's what gets subscribers, then maybe you'll make some life-changing money. So go ahead and hit that subscribe button. What are you waiting for? Like I said, the price of Bitcoin is continuing to the downside and it looks like it doesn't have much sign of slowing down. Fortunately, it looks like we do have a bit of a bullish divergence right here, indicated by this higher low right here for the RSI and this lower low for the price. And this could actually see us have short-term relief that could take us up to a level of support, turning it into resistance. But unfortunately, it does look like we haven't played out this bearish flag yet, which has a price target of roughly $34,500. So maybe we will have a little bit of a relief right here, but it might be a bull trap, and maybe we're going to continue to the downside some more. According to this article on Cointelegraph, it looks like Bitcoin ETFs have posted $76 million in net outflows on bad 7th day of trading. Despite unceasing outflows from Grayscale, though, the outlook on spot Bitcoin ETFs remains positive, with more than $1.1 billion in total inflows across the board, says Bloomberg ETF analyst James Seyfarth. According to his post over here on X, GBTC saw over 640 million flow out today, and that was on Friday. Outflows aren't slowing, they're actually picking up, he says, and this is the largest outflow yet for GBTC. Total out so far is $3.45 billion. According to this article on the block though, it looks like most of the selling pressure has actually been from FTX. Imagine that. FTX is continuing to dump on us, and according to this article, Bloomberg Intelligence senior ETF analyst Eric Balchunas posted data over the weekend showing that Grayscale's fund had shed $2.8 billion since its trading first began. FTX selling off shares of Grayscale's ETF is part of the failed cryptocurrency exchange's ongoing bankruptcy proceedings, according to CoinDesk. The bankruptcy estate sold all 22 million shares in FTX's possession, it also said in its report. So while FTX has been selling, and it looks like they sold 22 million shares of the GBTC trust, luckily, it looks like they've sold all of the 22 million shares that they actually had in their possession, so it looks like they can't cause any more selling pressure. At the end of November, it says, a Delaware bankruptcy court said FTX trading and affiliated debtors could start selling its Grayscale shares. FTX owned about 22 million shares of Grayscale's flagship Bitcoin fund, at the time worth $597 million. Here's the post on X from Eric Balchunas that it was actually referencing in that article, and it says despite all of the GBTC outflows on Friday, the 9, which is the remaining of all of the ETFs on this list, overwhelmed it with an additional $623 million in net inflows. Total net flows stand at plus $1.2 billion as 9's assets under management hits $4 billion versus GBTC's minus $2.8 billion, upping assets under management share to 14%. I know this is a lot of numbers and data and it's really boring, but really what you can surmise from all of this information is that GBTC can't continue to have all of this selling pressure, and eventually BlackRock's inflows and all of these other ETFs that people are pouring money into are going to overpower the selling pressure, and whenever that happens, we probably are going to go parabolic again. Unfortunately though, it looks like FTX isn't the only legendary exchange collapse that's going to continue seeing downward pressure on the market. According to this article on Cointelegraph, Mt. Gox is now confirming creditors' Bitcoin addresses for repayment. According to this post by Mendao, Mt. Gox BTC distribution is expected to hit the market over the next 2 months, and this includes 200,000 in Bitcoin that is going to be unlocked. This doesn't necessarily mean that all of this Bitcoin is going to be flooded onto the market, because a lot of people might actually want to hold on and wait until the top of the bull market before they actually sell. Mt. Gox actually collapsed way back in 2014 though, so everybody who actually will be getting their Bitcoin back is undoubtedly going to be in profit, and that profit is probably going to be massive, so they might actually want to sell. In April though, it looks like the halving is going to reduce the annual supply by 160,000, so while over the next couple of months maybe 200,000 Bitcoin are going to be flooding the market, after that it looks like the annual supply is going to be cut by 160,000, so maybe these two will actually cancel each other out. But either way, as Mendao says, there are definitely some interesting supply dynamics in play in coming months. Let me know in the comments, do you guys think that the GBTC Trust and Mt. Gox are going to continue to push us down for lower lows? Or do you think that the FTX selling pressure being exhausted is finally going to let these other ETFs take over and send the price higher? Either way, thank you guys so much for watching, and don't forget to hit that like and subscribe button. But most importantly, don't forget to have a wonderful day, and I'll see you next time. Bye.